I'm not adding to positions, but I feel really good about my kind of combination of the economically sensitive names to benefit as the economy improves. I also own a whole ton of reopen names, even though they've had a nice run from the lows. I still think that's a place where you want to be, but I also still like secular tech. Super excited that healthcare is finally leading, at least for the day anyway. And I think a lot of that was Thermo Fisher buying PPD for $17 billion, which didn't get a lot of coverage. And of course, you also had United Healthcare blow away numbers and raise guidance. In this environment, it's hard to see anybody raising guidance materially, and they are. But as to your point, we talk about data all the time, and we really got absolutely incredible data across the spectrum. That's not really a surprise, right? We've been talking about the stimulus kicking in, and we're now starting to see the results. Retail sales, I look at the control number, that goes right into GDP at 14.2%, and you are 11.5% above pre-pandemic trends in retail sales. That's remarkable. And then to your point on initial claims, yeah, we're back to levels not seen since the 14th of March. Manufacturing continues to hum, and housing, the NAHB housing index, it's the fifth best on record. So all this data is really good. It's not surprising. We talked about all the stimulus hitting GDP and improving GDP and improving earnings. We're off to a great start in terms of earnings. We'll watch the reactions for sure. But again, I think you still want to have a bit of a barbell in terms of owning some cyclicals and some secular growth. I think I'm really excited for next week because we get a whole bunch more in terms of earnings, and we'll hear what the companies have to say directly.
Shepard Smith here. Thanks for watching CNBC on YouTube.